On to my market experts we go. CFRA Chief Investment Strategist Sam Stovall is here, along with Nuveen Asset Management Chief Equity Strategist Bob Dahl. Great to see you both, gentlemen.
Happy to be here.
Thank you so much for joining us. So here we are approaching the end of the first quarter. How do you see it? What's going on, Sam?
Well, things are actually looking good. As Fed Chair Yellen said, the economy is improving, and we're actually seeing that in terms of corporate profits. Now we're heading into the third quarter in which we are emerging from this earnings recession, and now expectations are that we're going to see earnings up by 10.3% in the first quarter of 2017.
So was that better than you expected? I know it went all the way up to more than 6% earnings growth. Tell us what that earnings growth means, really.
Well, the 6% growth that we saw in the fourth quarter was good. We were actually expecting at the beginning of the quarter a number substantially lower than that, still in positive territory. What's interesting is that the earnings have ended up being better than the expectations by about 3.5 percentage points. So if that carries into the first quarter's results, we could see earnings up more than 13%, not just the 10% now.
Wow, that's a big number, Bob. Let's talk about that. Put it all into perspective for us. The earnings story is getting better. The economic story is getting better, but the Federal Reserve raises interest rates. Does that smash an economic recovery that's just gaining traction?
I don't think so. As you pointed out, the Fed basically said 3 times this year. Many feared they would move to 4 because the economy is doing better and inflation's kind of reached their target. I think what the Fed is doing is trying to catch up. You might argue they're behind. They've got to normalize interest rates. And at this point in the cycle, the Fed normalizing rates means the economy is good, earnings are good, and markets should go up.
Yeah, but Bob, I know you look at more than just the backdrop. You've got a backdrop that's getting better, but valuations are up there, right? This market's up 14% since Election Day.
No question. You cannot make the point the stocks are cheap. Absolutely. But relative to other things, stocks are still not expensive. Remember, it was not that many months ago where the S&P 500 had a higher yield than the 10-year Treasury. That's a gift to own stocks. So stocks still have more to go. We do need the fundamentals, and the fundamentals are earnings. And what we'll get to it is some policy follow-through from the Trump administration.
How do you see it, Sam? I mean, it was no surprise that the Fed raised rates this past week.
Absolutely. Well, it is recalibration, not restraint. Historically, the Fed funds rate has been higher than inflation by 1.5 percentage points. So actually, we should be closer to 3.5% rather than the sub 1% where we are right now. And also, as Bob just said, because the dividend yield on the S&P 500 is still within 1 percentage point of the 10-year note, there really is no competition from bonds. Historically, the market has risen an average of 11% in the coming 12-month period when the yield is within that 10-year note, and it's gained in price more than 80% of the time.
Wow, you agree with that?
I do. Look, the market's up a lot. You pointed that out.
Yeah.
I think there are 2 reasons why. One, the economy and earnings are doing better. That needs to continue, and I think we both think it will. But I think creeping into the market is expectation that we are going to get some pro-growth fiscal policy. The question mark is when, how, what does it look like? Eventually, the market will struggle if we don't get that, Maria, and there's a lot of noise in Washington.
I totally agree. I mean, you know, I spoke with Kevin Brady this past week. He's obviously chairman of House Ways and Means Committee, and he said they are on track for Obamacare replacement followed by tax reform, and they think this is going to happen by August. But what's Plan B? Sam, what if it doesn't happen? We know the stakes are up here at this point.
Well, they are. Right now, you've got the Trump hype, and I worry about it morphing into a congressional gripe. You know, hype to gripe, because what the Trump administration is pushing forward might get some pushback from Congress. They realize that we're anywhere from 80 to 100% debt to GDP, so whatever additional expenditures really have to be met with cuts in other areas. And how many representatives want to go back to their constituents to say, look, I just got you fewer jobs?
How big is the threat of a sell-off at this point? I mean, if they don't have a Plan B, if this doesn't materialize the way we're all expecting. Bob, you're out there with clients all the time. What do they say? Will they dump their portfolios if they see that this is not going on the timeline that they thought?
There will be some selling. I think there's no question about that, because we have come so far. You know, at 1,800, where we were a year ago on the S&P, there wasn't any expectation for this at 2,400 different stories. So I would argue that they've got to continue to show progress. And if we don't have the progress, we'll get a sell-off.
Yeah, so what do you do then? Are there areas to hide in this market that you would recommend that they won't necessarily get caught in a tailspin lower if, in fact, things go wrong? I want to know from you both, where is the growth and where are the areas that could be resilient? What do you think, Bob?
In a continued upmarket, financials, technology, and controversially, healthcare are our favorite areas. If we get a sell-off, you've got to be in the more defensive areas, utilities and telecommunications and some of the staples names. But I think that will only be temporary, assuming earnings continue to be okay.
Yeah.
Big sell-offs that last a long time in the market are always accompanied by a major decline in earnings, and I don't see that. Setback, pullback, correction if the Trump administration doesn't follow through, absolutely, but not sustained.
By the way, you said to me months ago, we're going to get double-digit earnings growth regardless of the fiscal policy coming out of Washington. So then I ask you, where's the growth right now, Sam?
Well, the growth right now, double-digit growth is expected to come from the financials, also looking at some of the more cyclical areas in general, technology, et cetera. So as you were asking, like, where do you go for growth? Well, you go for those areas that will benefit from an expanding economy.
Sam Stovall, Bob Dahl, don't go anywhere. We want to get into international when we come back. A lot more to discuss. Take a look at some of the big market events coming up next week that could impact your wallet. Existing home sales, new home sales, durable goods and manufacturing, PMI, all key economic indicators to watch. A few major companies reporting earnings next week as well. That could move the markets. Nike, General Mills, and KB Homes among the big names to watch. Of course, we are approaching the end of the first quarter. Also note, Neil Gorsuch's Supreme Court confirmation hearings begin on Monday. Also on Monday, James Comey and other Intel officials will be testifying on Capitol Hill about Russian hacking.